76% of Americans live paycheck to paycheck. Is that you? I'm the CEO of 5 different companies. I wasn't born into it. We lived on welfare, but I wanted more. I created this show, The School of Wealth, helping people escape poverty like I did. I want to help you out of that consumer debt.
This is Brother Kim Carter. We just want to say thank you for reaching out to us, meeting our concerns and what we need to do. And I know you guys working hard on your side for the Carters, and that we are looking forward to be financially free.
Teach you how to increase your credit score. Teach you how to make more money at your current job or your current business. And then how to actually create generational wealth without changing your lifestyle. It is going to be a lot of fun. This is not like regular school. Hey, I'm Rondi Lambeth, and this is the School of Wealth.
Hello, my friends. Good to be here. I'm back in Idaho. Spent the last 2 weeks. Oh, I got a little cut on my arm. Spent the last 2 weeks in Mexico. Technically, I spent 10 days to be accurate. 5 days in Cabo San Lucas on a business trip. And then another 5 days in La Paz on another business trip. 2 sets of different groups. So got lots of sun. Got lots of relaxation. You guys ever come back from vacation and think, man, I need a vacation from my vacation? First world problems, right? All right, so tonight we're going to talk about increasing credit scores. So we have here at Fortress University, we have 3 M's, the 3M program, or M3, and that is maximizing your credit scores, whether it's personal or business. Maximize your credit scores. Minimize your debt and taxes, and then multiply your income and assets. And that's really the foundation of creating a fortress around your finances and generational wealth is the M3. Maximize your credit, minimize your debt and taxes, multiply your income and assets. And tonight, we're talking about maximizing credit. You can ask me anything you want. If you're tuning in from Instagram, Facebook, LinkedIn, we're live on YouTube as well. You can post in your questions. I'll do my best to get to all of them. And you don't need to wait your turn. Just start typing in your questions because I'm going to get to them as fast as I can. That also helps me if we get a little delay. Not delay. There is a delay because we're broadcasting live everywhere else. But if I don't have a lot of questions, I don't want to just sit here and flap my lips, if you know what I mean. I'm looking on my phone to see, we're using a new technology today. Hopefully, Chastity, you can monitor the Instagram questions because I don't see anything there. So let's get started. Everybody saying hi. Hello. We got Melvin, Willie, Heather, and Piece by Piece. Piece by Piece. Awesome. All right, guys. So what's the first thing you need to do to maximize your credit score? You know, I saw one of these. I'm going to do air quotes here in case you guys are just listening. Air quotes. Social media influencer. I saw an Instagram influencer. It was either this morning or yesterday. And she said, the fastest way to increase your credit score is to manage your late payments. Well, young lady, that is not accurate. That is not true. It's not even close to being accurate. In fact, how long you've had your credit open is almost the same impact as whether you pay your bills on time or not. Most people focus on the late payments and ignore everything else. But in fact, only 17% of your credit score, 17% of your credit score has to do with the negative payments, the late payments, the collections, the charge-offs. Now that 17% is a big number, and it could prevent you from getting a house, but it's almost always not the score that prevents you from getting the house or the car. In fact, credit scores never get you approved for anything. Let me repeat that. Credit scores, your credit score will never get you approved for something. They only get you denied. See, your credit score will open the door for you to qualify for a loan or a credit card. They will never get you approved for a loan or a credit card. And I rarely say that word never, and I will say it again. Your credit score will never get you approved for a loan or a credit card. Credit scores only get you denied, and they only get you into the door. You still have to qualify for the loan or the credit card. Case in point, if you had an 850 credit score and you wanted to go buy a new house but have no income, no savings, no down payment, no history of ever owning a home, guess what? You're not going to get a 30-year mortgage, regardless of your credit score. On the other side, if you have a 400 credit score, it's absolute trash. Or you have no credit score, zero. You follow Dave Ramsey's advice. You cut up your credit cards, you paid off your car, you pay cash for everything. You have envelopes of cash, and that's how you manage your money, which is a great way for some people. And you have no credit score at all. You will be approved if you have income and the ability to pay back the loan for the house. So if you have no income and no ability to pay for a mortgage with an 850 credit score, denial. If you have no credit score but the ability to pay the loan, you will get approved. See, there's no law, there's no policy that says you have to have a credit score to get a mortgage. Now, let me break that down. If you have a 450 credit score and income, you can't get the mortgage because you have to have a minimum credit score. But if you have no credit score, there is no minimum. Isn't that interesting? Let that sink in. If you have a credit score, there's a minimum. Usually it's 580, depending on the type of loan, 640 for conventional, 740 for stated income. See, there's a minimum if you have a score, but if you have no score, there's no minimum. So your credit score will never get you approved for anything. It just gets you in the door, and then you have to qualify for it. Now, you could argue and say, well, I can get a credit card and never prove income. That is true. Your credit score will get you in the door, but then the bank is looking at other factors. Yes, you don't have to provide financials. Generally, when you apply for a credit card, they're going out on a limb. They're taking a risk on you. That's why you're paying up to 30% interest with a credit card. So you don't always have to provide income. The last four or five car purchases, I'm trying to think, but we'll just call it the last 5 car purchases that I made, I have not provided income. In fact, the last one I provided income was almost $1 million 45-foot diesel pusher bus. I think that was the last time. Not even my airplane did I provide income to purchase it. But the bus I did, because that's a recreational, very expensive vehicle. But all my vehicles, my Ferrari, all the other vehicles that I have control of that I don't own, because I own nothing but control everything. These vehicles that I control and use on a regular basis, I did not have to provide income at all. Now, I had to have a base credit score to get it, but my credit score was not what got me approved for these loans. Not at all. What got me approved for the loans was my credit history of many car loans with never having any late payments or defaults. Now, does that mean I've never had a repossession? No, that doesn't mean that. I've had a repossession. It's just been a really long time, and I had it removed from my credit report. So the first thing we want to do with building a solid financial foundation is we want to maximize the credit score. So back to what this influencer said. She said the number one way and the fastest way to increase your credit score is to manage your late payments. Now, why would she say this? Does she truly believe that? No, I don't think she does. I don't think she's that ignorant to believe that. I didn't say stupid. I said ignorant, as in doesn't know any better. I think she knows better. So why would this woman who's got millions of followers be giving them this bad advice? It's because she has a credit repair company that focuses on not education, not on adding trade lines, not on teaching you how to increase your credit score, but rather disputing items for a monthly fee. And so she's saying this so she can get more monthly fee credit repair clients. See, the fastest way and the most impactful way of increasing your credit score is paying down your credit card balances, credit utilization rate, not debt to income ratio. I hear this on a regular basis. My credit's low because of my debt to income ratio. No, your credit score has nothing to do with your debt to income ratio. It never will have anything to do with your debt to income ratio. That's like you saying, my credit score's low because I got a shaved head and bankers don't like sexy 6'4", 250-pound men with a beard and a shaved head. That's ridiculous. FICO doesn't care if I have a beard. FICO doesn't care if I have a shaved head. FICO doesn't care how tall I am, how short I am, how skinny or fat I am. They don't care that I like women. They don't care. Just like FICO doesn't care how much money you make. It's not part of the formula. Whether you're Christian or Muslim or Hindu, they don't care. They care about these 5 things. How much money you owe on credit cards. They do care about that. In fact, it's 35% of your credit score. 35% of your credit score has to do with how much you owe on a credit card, where late payments is only 17%. So what's more? 35% Miss Influencer or 17%? Obviously, the 35% is more. So if you want to increase your credit score, the fastest, most effective way to do it is pay off all of your credit cards. Now, I know that sounds a lot easier than it is, but that's the number one way to do it. Now, the second most beneficial way to increase your credit score is to manage your late payments. Because that's 17% after all. Everything else, I'm sorry. No, the second way, 35% of your credit score has to do with payment history. I was getting so excited here, I messed that all up. And that would have been a perfect clip for social media content, but I was getting all excited. So I got to start over. 35% of your credit score has to do with your payment history, but only half of that has to do with negative payment history. So that's the 17%. So 35% has to do with payment history, but only half of it is negative payment history. The most impactful thing on your credit score is your credit card balances, and that's 30%. Which, what is more? 30% or 17%? Obviously 30%. So if the fastest way to increase your credit score, the most effective way to increase your credit score is to pay off your credit cards, because that's 30% of your credit score. Your negative payment history, 17%. Now, below that is your length of credit history, which is 15% of your score. 15%. Well, negative payment history, 17%. Credit cards balances are 30%. And length is 15%. What could you do to fix your utilization rate and increase your length of history? And the other part, 10%, has to do with the types of credit you have. So we got 30% for credit cards, 15% for length, another 10% for types. What if we add that up? 10, 15, that's 25. 55% of your score could be impacted if you do one thing: manage your credit cards properly. What could you do to make FICO happy? Add authorized users to your file. Have your friends, your family, your coworkers, employees, employers add you to one of their credit cards as an authorized user. And now you're hitting 3 of the 5 things. That can have a drastic impact on your credit score. The problem is some people don't have friends. They don't have family members that could help them out with their credit. And I really don't believe that. I don't believe it's you don't have any friends, and I don't believe that it's you don't know anybody that has good credit. I believe it is your pride is in the way and you don't want to ask for help. In fact, I was talking to a client earlier this week, and this is now like the 3rd time she's asked me, how do I increase my credit score? I'm like, well, we deleted everything from your credit, and the only thing that's on there is maxed out credit cards that are brand new. And I told her now 3 or 4 times, the only thing you can do is buy trade lines, which we have up to 5,000 trade lines. I have a lot of credit cards, but she doesn't want to spend any money on that. And I don't blame her. I said, or you could ask your family. And she has a very wealthy family, very, very wealthy family. And she's like, I don't want to ask them. What else can I do? I'm like, that's it. So her pride is getting in the way. So if you want to really increase your credit score very quickly, it's pay down your credit cards. If you can't, then you have to swallow your pride and find somebody to add you to their credit card as an authorized user. Now, inside of Fortress University in the app, there's a whole course in there talking about authorized users, what to say to people, how to ask them, how to explain it. So that way they don't worry that you're going to damage their credit, because that's their biggest concern. Your friends and family, they want to help you out. Your coworkers would love to help you. But they're worried that your bad credit's going to affect them. It doesn't work like that. Think about it like this. If I flew to Heather Havenwood is on here. She lives in Tampa. If I flew to Tampa and I wanted to go to dinner with Heather, she's going to pick Amanda and I up at the airport, which I'm sure Heather would happily come pick me up at the airport if we're going to go to some fancy steakhouse, because that's what I like at steakhouses. And we're going to go to dinner. Heather would pick me up in her car. Do I have to worry about whether she has insurance or not? I mean, yeah, it's probably a concern, but I'm not going to say, Heather, let me see your insurance card. Let me see your proof of registration. Let me check the air pressure in your tires. No. Do I ever do that with the Uber drivers? No, I just get in the car, right? When I came home from Mexico, I called Uber, I got in the car, and I went home. I didn't ask him anything. So when you get in that car of someone else, that's like the authorized user. See, you get in the car, my driving record does not affect Heather's insurance. Heather's driving record doesn't affect my car insurance back in Idaho. When I get in that Uber, my driving record doesn't affect his insurance. Whether he maintains the car, like if the engine broke down, I'm not responsible for it. Now, if it broke down the side of the road, it would suck because I'd have to wait for a new Uber. So it's the same thing with you when you get an authorized user. Your bad credit doesn't go to them, but their good credit shows up on your credit report. Their credit history shows up on your credit report as your history. I just finished my weekly tax session with my tax coach, and there was a gentleman on there, and he had publicly thanked me for teaching him this. And he put his children on his credit card. Children, as in like 19, 21, 22. They had no credit scores. 30 days ago, he did this. They're now in the high 700s. In fact, I think he said it was 785. From nothing to 785 by simply putting them on his credit card as an authorized user, because now they have properly managed credit cards with low balances, length of credit history, the right amount of credit history, etc. So the fastest way to increase your credit score is to manage your credit cards. And then I want to show you something inside of Credit Mojo. Oh, I'm going to have to log back in because I waited too long. So let me get, sorry guys. I wanted to show you this. It was really important. And I flapped my lips too long to where I missed the chance to get this email. It logged me out for security reasons of Credit Mojo. You'll see what I'm doing here in a second. I'm going to hit never save. Okay, now I'm there. So let's bring in this screen here. Share screen. This one here. So this is a credit report. You can see they have a 558 credit score. Remember what this means, guys. This means there's a 55.8% chance he will pay his bills on time over the next 2 years. Make sure I'm sharing that with you. Yep, I am. Okay. That's all this is. 558, that's 55.8. So if you had a 740 credit score, 74%. Score builder, 90 points is what he's losing right now. 90 points due to negative payment history. 137 points that he's losing right now due to credit card balances, which goes all the way up to 168. So he's not completely maxed out. Otherwise, this would say 168. So if we remove all of the late payments and he pays off his credit cards, he would be a 785 or 78% likelihood of paying his bills on time. But if we only remove the negative payment history and he does not do anything with his credit card balances, when we're done, his credit score is still going to be a 648, which is not good. I mean, it's not horrible, but it's a 648. If you need a 740 or a 78 or a 680 or even a 650 credit score, he's not going to get it because it's not as important as the credit cards. So what can he do? Let me show you. If you click right here to score boost, this is the simulator. If he went and maxed out the remaining balance of his credit cards, he spent $3,900. Look what happened to his credit score. It'd go down to 527. He'd lose 31 points. He's right here. If he paid off his credit cards today and they reported tomorrow, he'd have a 695 credit score with not removing any late payments. Now, he'd have to pay off $14,000 of credit card debt, and that's a lot of money. But when it comes to what's the most impactful way to increase your credit score in the fastest way, it's pretty simple. It's paying off your credit cards. Look at that. He now qualifies for a mortgage without touching anything on the late payments. Now, if he's got charge-offs with balances and collections, that's a different story. His score is high enough for him to qualify, but he's not going to go through automatic underwriting. Here's something else I want to show. If you scroll down, see this button right here? It says Best Paydown. This is the day that Chase reports. They report on March 8th. So if he pays off his credit card today or tomorrow, then on March 8th, if he refreshed his credit score, it would be higher. He needs to pay this one down by the 10th, this one down by the 30th. So what happens if he pays this on the 11th and this one on the 11th? Then it's not going to report until next month because they already reported. They report on the 8th of the month. If you pay your credit cards on the due date, FICO doesn't know they're paid off. So realistically, he could be paying off his credit cards in full every single month. He's just not paying them on the right date. And I see this all the time where clients will say, hey, why is my credit score not going up? I'm like, your credit cards are maxed out. No, they're not. I pay them off every month. It's because they're paying them on the due date, not the report date, which is what Credit Mojo tells you. These are the report dates. So if he really wanted to increase his credit score right now, 137 points, just pay off all the credit cards and pay them off on these dates. That's how you increase your credit score quickly. Now, what if you don't have, you could say, well, I don't have $14,000. No, you could go to a company like Prosper, Rocket Money. You could borrow money from a friend, a family member. You could do some type of cash advance loan. I don't recommend those, but if that means your credit score is going to go up 140 points, maybe it's worth it to do a hard money loan for a week or 30 days. So you can borrow or get business credit. If you establish business credit, business funding, you can now get a loan on the business side or even a loan on the personal side. See, a loan doesn't affect your credit score much. It's very, very little. So if you got a $14,000 loan, FICO's not going to really care about that. And then if you took that $14,000 loan and you paid off the $14,000 of credit card debt, your score will skyrocket. And now you can get 0% credit cards to pay off the $14,000 personal loan. And now you got 18 months of no interest. And as long as you don't use those cards again and get into more debt, then you're winning. Hope you guys help. Hopefully that helped. All right, let's see. I'm going to get into some Q&A now. Can you explain what's going on with the CFPB? I can. CFPB is a private Gestapo force that was created by Elizabeth Warren that is funded by a private banking cartel. It is not part of the U.S. government. They are not U.S. government employees. And this was a literally Gestapo force that is financed by the Federal Reserve to regulate and punish banks that are not falling in line. And it's gone outside of just the banking. It was supposed to be just banking stuff. But like the CFPB came after Facebook. What does that have to do with financial protection? So CFPB is Consumer Financial Protection Bureau. What does Facebook have to do with financing? It doesn't. So the CFPB was going after mom and shops. They were closing down companies, throwing people in jail, showing up with AR-15s and terrorizing thousands and thousands of business owners. And the Trump administration, through a lot of people saying, look, we're being terrorized by this unregulated, financed by a banking cartel agency. We got to shut it down. Now, does it affect the credit repair industry? It actually does in a big way. It affects it in a very positive way because they were coming after every single credit repair company out there. They were trying to shut them all down because they don't want you to be able to have a second chance. The CFPB was trying to shut down every single credit repair company. The first one they went after was the largest one, Lexington. They fined them $3.4 billion. They tried to bankrupt them. They made it so it's illegal for a credit repair company to use a telephone to offer free consultations. That's what Lexington Law got fined for. $3.4 billion for offering free consultations over the phone. This is how bad they are. Now, could we use them to increase the likelihood of getting something deleted? Yes. And that's where these people are focusing on. Are the people that are talking about it, the credit repair people are talking about it so much, is because they were using the CFPB to bully the banks because they were scaring. They were going on and filing complaints against a collection company or a bank, and the bank would be just like, go away. Yes, you owe me money, but I don't want to deal with the CFPB. And they were also the biggest strategy they were using was for inquiries. And quite frankly, they were just committing fraud. They were filing CFPB identity theft reports saying that I never applied for that American Express credit card because they got denied. So then they lie and say, I never applied for this. And then the CFPB would get in touch with American Express. American Express would be like, just delete it. So is it going to impact us in the long term? Yeah, it's going to make things a lot better. Is it going to hurt us? I don't think so. Maybe it slows down a little bit of deletions, but to be frank with you, We did not use the CFPB much at all. It was only in cases where there truly was a violation and we thought we could use them to get them over the finish line to delete something. So thanks for asking that question. Great one. I was talking a lot last fall about the credit scoring changing, and it was to go into effect January 1st, 2025 on mortgages. And for some reason that got postponed. And FICO lost the lawsuit. The U.S. government lost the lawsuit against Vantage. I think I truly believe it's based on what I was told by FICO and how this algorithm was going to work. I think it was going to completely destroy the real estate market, because for 50% of Americans, it was going to crush their credit scores. For business owners and people that max out their credit cards and then pay them off in full, it was going to completely destroy their credit. And I think that would have been really bad for the economy, because now you have people that have money, have great credit, have a credit score 150 points lower, and now it just messes everything up. So I think for that reason, they postponed the credit score law change. What's this? Yo, look at this. Thank you so much, Troy. I appreciate that. Took you from the 500s to 820. You don't own a home, let's get you in a house. Get you in the house. Or at least get you buying some real estate. You don't need to necessarily live there. Let's see. I'm just scrolling down through some of these. What's the repercussions of Experian being sued? Will other bureaus be sued? You're talking about the CFPB. Back to that. Are there more likely delete items in the investigation? I kind of answered that. Credit bureaus get sued 4,000 times per month. So if you take 4,000 divided by 20, because there's 20 business days during the month, credit bureaus get sued 200 times a day. 200 times a day. So the fact that the CFPB went after Experian, it's if you didn't know any better, you think that's a big deal. They get sued all the time. It's so it really wasn't that big of a deal. The media was just covering it. Can a company or trust buy a property on behalf of its benefactor without the individual having a standard income and decent credit history? So in order for a company or a trust to buy something, get a loan, they have to qualify for the loan. They have to show that they can pay it back. So if you had a trust, and let's say you have $100 million in your trust, and you want to go buy $1 million beach house or condo, and there's $100 million in the trust, and you can get access to that and make the payment, then sure, they can go buy it. But if you have a trust or an LLC, you just created it out of thin air, there's no asset, there's no revenue, there's no cash, then no. I mean, I see this all the time on social. I saw it again today, and it takes a lot of discipline to not respond to some of these people. And it was, here's the way to get wealthy. Open an LLC, get a bank loan for $300,000, go buy single family residence and short-term rentals with the LLC, and then retire. It's like, banks don't just throw money at LLCs because it says LLC behind the name. You can't just get a loan because you have an LLC. You have to have revenue. You have to have collateral. You have to have assets. You have to have cash flow. You have to have tax returns. Now, can you get loans without those things? Sure. They're called MCA loans, merchant cash advances. And basically, you send them your bank statements, and then they give you a loan based on how much money is being deposited in your bank statements. And then you're paying up to 1,000% interest. Yeah, 1,000%. These are payday loans for business owners. I'm not going to say 99%, but I'm going to say this. The majority of the social media influencers, and I have a couple friends that are doing this, and I told them, like, these are bad companies. And they're like, well, they're good companies. They're doing 9 figures a year in business. I'm like, that doesn't mean they're a good company. So the majority of the influencers out there that say, I can help you get business credit, and they're using companies like Cardiff.co. If you go to Cardiff.co and you put in your cell phone number, they're going to sell that to thousands of solicitors, thousands of people. And these guys will call you and text you and harass you and try and lie to you and say, I can get you $100,000 in the next 24 months. If you are dealing with somebody like that, you should run. I'm not going to say it's a scam because it's legal what they're doing, but you're going to get ripped off. And essentially the way it works is if you deposited last month $100,000 in your bank account through your business and you made no money, you just deposit 100 in and you spend 100. These guys will loan you $100,000 at 300% interest over the next 3 years. So now what does that mean? Now you got to pay them back $300,000. They're going to take they'll take $3,000 a day out of your bank account until that $300,000 is paid back. And they'll say stuff like, hey, it's only a 12% interest loan. $100,000 in the next 24 hours, it's only 12.5%. And then you read and you're like, oh, that's great. And it's a daily payment. So that way you can lower how much interest you're paying back. And you're like, great. And then you sign it and then they give you the money. And the next day they take out $3,000. You're like, what happened? Oh, it's 12% interest a day. Yeah, a day. That's an MCA loan. That's what most of these social media people are promoting when they say, I can get you business funding. It's garbage, guys. I'm not going to say it's a scam because it's legal, but you will feel scammed. You will feel ripped off, and they will flat out lie to you. Oh, it's only 12% per day. Ha ha ha. I'm getting a $30,000 commission on you, sucker. Bad. Let's see here. Can you provide more information on what services your debt settlement and legal department provide? Would you advise debt settlement or BK? So we actually don't do debt settlement. We do debt restructuring. Why does that matter? Because there's a big difference between debt settlement and restructuring the debt that we do it. We restructure the debt by using UCC law, which is Uniform Commercial Code. It's the most powerful law in the world. It controls everything regarding contracts and money, including how our money works. The Federal Reserve note, also known as a dollar, which is actually debt, that's controlled through UCC. So what debt settlement does is they say, stop making the payments. And then in 90 days to 6 months, we'll reach out to the credit card company and we'll offer them a lump of cash. And then hopefully they'll accept it before they sue you. That's debt settlement. And you'll end up paying 70% of what you owe. So you owe $10,000 to American Express. Right before you get sued, they're saying, hey, we'll give you $7,000 over the next 3 years. And so you save $3,000. Except for you got to pay the debt settlement company 20 to 40%. So when you're all said and done, what happens with most debt settlement companies is you actually don't save any principal. They just waive all of the interest. So does it help you in the end? Sure. You save the 20, 30% interest. And yes, you can get out of debt much faster because there's no interest, but it completely destroys your credit. And you will most likely be sued. Now, they take care of the lawsuit generally, but that's the debt settlement. What we do through debt restructuring is you cannot be making payments. I'm not going to tell you not to make a payment, but you have to be in default for a bank to settle or even talk to us. So once you're about 3 to 6 months past due, we would then reach out to them, sometimes text message, sometimes email, sometimes phone number. With Chase, we have the ability now, we can just send them an email, and within 7 to 15 minutes, we have a settlement of generally 50% of what you owe. So go back to the other case. With debt settlement, you're going to pay back 100% of the principal, essentially, and save the interest and destroy your credit score. With restructuring, you're going to save 50 to 70% of the principal, 100% of the interest. And because we restructured the debt, the long-term credit impact does not happen, because if you're on a payment plan, that is a new loan. So they can't continue to report you late because it's a new loan. We restructured the loan. So the late payments from the past stop reporting, and they can't report you late on the new one because you're making the payment. So that's the difference between debt settlement and what we do through debt restructuring. Now, would I advise bankruptcy? It depends. I used to advise bankruptcy all the time because I worked for the largest bankruptcy firm in California. When you ask a carpenter what to do, he takes out a hammer and he hits the nail, right? You ask a surgeon, do I need surgery? Sure, surgeons cut. Bankruptcy attorneys file bankruptcy. Now that I understand Uniform Commercial Code, now that I understand how to protect assets, now that I understand how to do legacy preservation, which protects your assets for generations and reduce your taxes. Now that I understand all of that, I haven't recommended someone file bankruptcy in a very long time. I can't remember the last time I said, I think you should do bankruptcy. Because if you can restructure that debt and not lose your assets and not destroy your credit and save thousands of dollars, why would you ever file bankruptcy? Unless you simply just don't want to deal with anything. And I think the only time I would recommend bankruptcy is you have a health issue, or you're going to have a health issue from a mental issue because of the stress and you just can't deal with it. But as far as filing bankruptcy over debt restructuring just to save a little bit of money, I don't think it's worth it, because that bankruptcy is going to be there your entire life. I was denied, I don't think it was last year, I think it was a year before that. I was denied $1 million line of credit from KeyBank that I was approved. I was approved for it. Everything was great. I opened the bank accounts. I was getting ready to get funding. And then I got a text message from KeyBank, pretty low, right? Couldn't even call me the private banker. Just sent me a text. Sorry, we can't do it. I don't know why. So I finally got on the phone and found out in 1998. Yeah, 1998. No, 1995. In 1995, when I was a 23-year-old man with 3 kids and going to college and working full-time at Waste Management as a garbage man, I filed bankruptcy over like 30, 40 grand, which was all the money I was making. It was basically 100% of what I made as a garbage man. Why did I file? Because I was a dumb kid. I had just got credit. I had great credit. I was buying motorcycles and cars and furniture. I mean, I went crazy, just like a lot of you probably have. I didn't know anything about money when I was 23 years old. They're just like, you're approved for everything. So for like 3 months, I got everything I wanted. I remember buying a Kawasaki Ninja with my American Express card that I just got like the week before. It was ridiculous. And so I ended up filing bankruptcy when I was 23 years old. And fast forward almost 30 years, I get denied a line of credit because apparently KeyBank, I got a credit card with them when I was 23 years old, almost 30 years ago now. Now, is it on my credit report? No, it's not on my credit report, but it's in the banking records. So just avoid bankruptcy at all costs. How do celebrities and athletes get millions in credit limits? Can regular people do the same? Regular people can do the same. So the way that the celebrities and the athletes get millions of dollars is the banks will loan them money on the ability to pay. Again, I work with a lot of athletes. And they will have millions of dollars in credit cards and loans, and they'll have 450 credit score, a 500 credit score. And they'll come to me and they're like, hey man, will you fix my credit? And I pull up their credit report and they got millions of dollars in lines, but they can't get a mortgage because they got a 550 credit score because of some old collections, baby mama issues, college issues, etc. And so we'll clean up their credit report, because your credit score doesn't get you approved. It only denies you or gets you in the door. So the way they're able to get these loans is they sign personal guarantees, and the banks know maybe the guy's got a $30 million contract, and I'm not a sports guy, so I don't know how this stuff. Let's say he's got a $10 million signing bonus and a $30 million contract over the next 3 years, but he's got horrible credit and no assets. Yeah, the bank's going to loan him money because they're going to file liens against him and they're going to get paid. Banks loan money to people, they're going to get paid. Now, could you do that? Yes, you could do it through your ability to pay him back, primarily through your assets, with your real estate, your businesses, your cars, etc. In the business credit course, I teach you how to use one bank loan to open another bank account, fund the account with $50,000, and after 30 days, taking that 50 grand out, the loan, opening a new bank account, and within about 6 months, you have 5 different bank accounts, all rotating the same $50,000 that you borrowed. And now after 6 months, you can go out and get $500,000 in funding through other banks by just recycling that. Now, you can't say it's income because it's not. And so you have to be really careful. And that's in the course. I teach you what to say so you're not breaking the laws and committing fraud. You can't say I have $50,000 a month of revenue because it's not revenue. So that means you have to do loans that don't ask if it's revenue, but it's based off of deposits. What's the link to buy trade lines? It is fortresscreditpro.com/trade lines. There you have access to up to 5,000 different credit cards and trade lines. You determine how old you want it to be, what type of credit limits you want it to be, what type of credit. So I recommend that if you already have a Visa card, that you get American Express, to Discover, a MasterCard. You shouldn't just have all Visa or all MasterCard or all American Express. FICO wants to see a mixture. They want to see a Visa, a MasterCard, American Express, and a Discover. They want to see a mixture on your credit. So we choose which one of those we want. And again, back to the, people that have large lines of credit or a large amount of debt, you need to get the large credit lines so it offsets the debt you have. Or if you're stuck in that $500 to $1,000 credit limit because you got those credit cards when you had bad credit. See, when you have bad credit and you get a credit card, you're not going to get a great credit limit. You might get $500 or $1,000, and you'll be stuck in that credit loop. So how do you get out of it? You get a trade line to show up with a $35,000 credit limit. And once that trade line shows up, that authorized user account from someone else's, when it shows up on your credit report as a $35,000, now you can go apply for a new credit card. And now you're going to get a much higher credit limit because you have a $35,000 credit card. If all you have is $500 credit cards, that's all you're ever going to get. Even if your credit score is 800, because you have never showed the bank that you're responsible to manage something over 500. Think about it like this. I haven't got to drive my Ferrari now for a couple months because I live in Idaho and the road's been crappy and snow and ice and gravel. But it rained all last week and it's supposed to rain all this week. I can't wait for the rain to stop. Why? Because one, I like it right now because it's washing all the garbage off the road. But in 2 weeks from now, when the sun comes out and the rain's gone, it's washed away all that gravel and garbage off the road, I'm going to start driving my Ferrari. Now, my nephew asks me all the time, can I drive your Ferrari? I'm like, no, I'm a good driver. I'm like, I've seen how you drive, and no, I don't trust him with the experience of driving that. If you had a 16-year-old son, would you just give them the keys to a hot rod or a sports car? No. Their first car you buy them, if you buy it for them, is a beater, because you know they're going to wreck it. And it's the same thing with credit. The bank doesn't want to be the first one to give you a $25,000 credit card when all you've ever had is $500 credit cards, because they're afraid you're going to wreck it. So by adding the trade line, that can benefit you so you can get higher credit limits. Do you have your children use the credit card to get the benefit, or being on the account is enough? Yeah, I would not. I've had lots of people on my credit cards, celebrities and athletes and high net worth people, clients. I never give them the credit card. And I recommend that you never, if you put someone on your credit as an authorized user, don't give them the credit card unless they're going to use it, of course. And then with these credit card companies, Capital One, Capital One, for example, you can limit how much they can spend. So I'll give you an example. Vanessa, who runs the processing, the customer service team for me, she has one of the company credit cards, and she can only buy office supplies, and she can pay for postage. If Vanessa went to the gas station and tried using the company credit card to buy gas, it would not work. If she went shopping, Vanessa would never do any of this stuff. I'm using this as an example. If she went shopping with her daughters and tried using it, it would not work. The cool thing with credit cards now is you can set limits to where they use it, and you can set limits to how much they can spend, total or per day. So with your children, if you add your children to your credit cards, you can set those limits. But if you're just going to add friends and family and coworkers to help them out, you never give them the credit card. In fact, when you ask someone, if you're going to ask them, hey, could you help me out? I'm trying to build my credit. I know this credit expert said if you added me as an authorized user, all of your credit history on that card would show up on my credit next month. My credit score would skyrocket. It would really help me out. I don't need the credit card. In fact, in almost every occasion, when you do this, there's a button, issue card or not. You don't even have to issue a card. So if you don't check the button to issue the card, the credit card company doesn't even send a card. All they do is they now just start reporting that information on their credit report. So no, you would never, generally, you don't want to give someone the credit card that they're authorized user, because if they went and maxed it out, you're responsible for that debt. All of it. So that's the problem. Don't give it to them unless you plan on paying it. That's why, like with your kids or employees, you're responsible for it. You would pay it. But if it's a friend, family member, friend, or whatever, I wouldn't give them the card. I saw a video saying you can call your credit card company, demand they remove late payments. Does that actually work? No. You can call and demand them to do anything. They're not going to do it because it violates the law. See, the Fair Credit Report Act of 1970, Fair Credit Reporting Act of 1970, says that the information reported on the credit report has to be accurate, has to be timely, has to be verifiable. And this is how we get items removed, is they're not accurate, they're not timely, and it's not verifiable. But it has to be accurate. So if you were late last month and you call up and say, American Express, I demand you remove this late payment, they're going to be like, well, you were late. I don't care if I was late. I demand you remove it. They're not going to remove it because the law says they have to report it accurately. So if they removed it and reported it as you paid, that's not accurate. It's not accurate at all. Well, then how do we get things removed? We get things removed because we find something else that's inaccurate and we threaten to sue if they don't correct it. Or we send nice letters to them. They say something like, hey, I know I was late last month. I really like spending $10,000 a month with American Express because you guys make 2% off everything I buy. And I know you're making billions of dollars from people just like me, and I'd like to continue using the card. Could you do me a favor and just not report any data last month? I'm not asking you to remove the late payment. I'm simply asking you not to report. See, there's nothing in the Fair Credit Report Act. There's nothing anywhere that says a bank has to report anything. It only says if you report, it has to be accurate. But nowhere does it say they have to report. So how do you fix that? You say, can you just not report last month? And that's why when you look at certain credit reports, you'll see ND, no data. Instead of saying paid as agreed or okay or 30, 60, 90, it'll say ND, no data. That means we got them to remove the late payment without violating the Fair Credit Report Act. So does it work to demand the bank removes it? No, demands don't work. Now, if you have proof that you weren't late, can you demand it then? Sure. Does that mean they're going to do it? No. But could you force them by suing them? Yes. And sometimes that's what you have to do. I got a client right now. We have 2 lawsuits. One is a bank reported her late a year after she sold the house. We have another one, Chase, is reported her late 2 years after the lease ended on the vehicle. And they're refusing to remove it, which is cool because now we have 2 very solid cases that's going to turn into a little bit of cash. So thanks for the question. All right, David Caps, what about Debt Helper that I'm using when they're not? Okay. There's a lot of things I'm really good at in life. Reading and talking is not one of them. So what about Debt Helper? I don't know what Debt Helper is, but I'm assuming that's some type of company that I'm using where they're nonprofit. We only pay them $75 a month for their fee, and they work directly with credit card companies where interest rates have been reduced from 22 to 29 to 8 to 10. It'll take 42 months to pay back per balances, and it wasn't debt settlement or bankruptcy. Okay, I got you. I got it. So it's probably a nonprofit that credit card companies own. So what the credit card companies figured out in 2008, when the market crashed, the world collapsed, the financial world collapsed, people are filing bankruptcy, people stopped paying, but there were a lot of good people that were afraid to file bankruptcy. They really didn't want to. Everything around them collapsed, but not necessarily them personally. And so the banks figured out something like, wait a minute, if we go start a nonprofit debt consolidation company, we could make a lot of money and help people avoid bankruptcy or help people from defaulting. So most of these nonprofit debt reconstruction or debt consolidation companies, it's actually the credit card companies. And what the credit card companies have done is they created a nonprofit. And so they're negotiating with themselves. So instead of you going late and ruining your credit and wiping all the debt out or saving 70% of the principal and 100% of the interest, you sign up with Debt Helpers, which is a nonprofit, which is probably owned by Bank of America or Chase or a combination of those. And now they're dropping the interest rate down to 10%. They're still getting all their principal and they're getting interest. That's how most of the nonprofit debt consolidation companies work. I'm not saying it's good or bad. It's just you should know it's really just the bank you're negotiating with. And look, if you can negotiate it, I don't know about the $75 a month. I mean, after they negotiate it, why do you have to keep paying $75 a month? It should be done, and maybe that is. So that's how those companies work. Did you hear that Doge took back all the federal employee credit cards, but then the Supreme Court ruled that they have to give the federal employees card? I didn't hear about taking any credit cards back. I know that the Supreme Court ruled that Doge could not cancel the $20 billion. But if you actually read into it, what they said was the people that have already done the work, you can't reverse that. You have to pay them. But the people that have not done the work yet, that have not followed the contract, you can cancel those payments. But I don't know about, so Doge gave him a credit card with $1 limit. That's funny. It's kind of like in California where if it was under $991 and you stole it, it was a misdemeanor. But if it's over $1,000 is a felony. So there was an Asian guy because they're the smartest people out there. This guy went and he made everything over $1,000 in the convenience store with a coupon for a discount at the cash register. So anytime anybody stole from him in San Francisco, it was a felony. So give him that. Should I probably do your program, Graham? My credit's still holding at 558. Won't it take the other one? If you're at a 558, that tells me that most likely you have late payments already on there because your credit score rarely gets below 600 from maxed out credit cards. And the only time it does if you have maxed out credit cards and no history. It's brand new credit. But if you're in the 500s, you probably have late payments. So you could definitely, potentially, I can't say definitely do anything because it's like a doctor saying, I guarantee I can cure cancer. Well, you can't guarantee it. I can guarantee you'll never pay through our pay per delete program if we don't delete anything, because that's how we charge is per item. It's $150 per account that we get removed. If we don't remove it, you don't pay a monthly fee on that. So TikTok, should I buy a house now or wait for interest rates to drop? I would, if you want to buy a house, I would not wait for interest rates to drop, because if you would have said that back in the 70s, you would have still be waiting for interest rates to drop. The fact that our interest rates were as low as they were, that's not normal. It's probably first house I ever bought, interest rate in 1989, or maybe it was 1990, was 15% at 15.5% interest. 15.5% interest. So I would, if you're ready to buy a house, I would not wait for interest to drop, because if it drops a half a point over the next 12 months and you lost 20% appreciation, which is the last reason you ever buy a house is for appreciation. But if you go buy a $500,000 house and it appreciates at 10%, you made 50 grand. But if interest rates drop, you might have saved $500. So when people say to me, I'm going to wait to buy a house because it's too expensive, I respond with, compared to what? Because if you compare the cost of housing to oil, to gas, to energy, to clothing, to gold, to vehicles, real estate has not gone up that much. Now, it seems like it has because the wages haven't gone up much either. But if you compare it to everything else, it really hasn't gone up that much. So I would rather see someone buy a house now and then refinance it in a year from now when the rates come down, or 2 years from now, or 3 years from now. Or you can do this. Let's say you're going to buy a $500,000 house. Instead of asking for a discount on the house, let's say you say, hey, I'll give you $475, saving yourself $25,000, which might save you $30-40 a month on your payment. Instead of asking for a $25,000 reduction on the principal, ask the seller to buy down your interest rate. So this seller now pays the bank 25 grand up front for interest, buying it down. So you can go from a 6.5% interest rate to, say, a 5 3/4 interest rate, saving you thousands and thousands of dollars. I should probably do a little teaching on that with some graphs and charts. So Chastity, take a note. I think that'll be a good one. Lambo's here. Good to see you, man. Hope you're doing well. What else we got, Chastity? Oh, here we go. Should I freeze my credit reports to protect against identity theft, or does it help my credit? up or hurt my credit. Yes, I recommend you freeze your account immediately. Every single one of you right now, freeze your credit. Go to annualcreditreport.com/freeze and freeze it now. Everybody should have a frozen credit report at all times. The only exception to that is if you haven't signed up for Credit Mojo yet to sign up for credit repair, you got to wait until we get access to Credit Mojo, then freeze it. The beautiful thing about freezing and unfreezing your credit is when you freeze it, it's invisible to any thief or any potential creditor. Your current creditors can still pull your credit report, like your credit card companies. They pull your credit every month. I don't know if you guys know that, but your credit card companies will pull your credit every single month. If you freeze your credit, they can still pull it because they already have a relationship with the monitoring service. But I would recommend that everybody have their account frozen at all times. It's one of the easiest ways to protect yourself and prevent identity theft. TikTok, cool. With the economy getting worse, is it smarter to use credit for everyday expenses and save cash? I think that it is smarter to use credit to pay for everything, leave your cash in a high interest yielding bank account, and then at the end of the month, pay off your credit card so you're not paying interest. So I'm of the personal belief to not pay with cash, not pay with debit card, not pay with check. Use your credit card to pay for everything, get the points, the benefits, the protection. When I was in Cabo San Lucas 2 weeks ago, there was a wedding party there. We stayed at the Hard Rock, and this wedding, a whole bunch of people flew down, and the airlines lost the bride and the groom's luggage, along with the rest of the wedding party. All of the luggage, completely lost, not delayed, lost. And they were in the pool drinking heavily. And I said to one, and one was actually a travel agent. I said, hey, how'd you guys pay for your airline tickets? Did you pay with a debit card or did you pay with a Visa Signature card or American Express Platinum? And all of them paid with a Signature card or American Express Platinum. I said, great news, guys. Your credit card will pay you up to $3,000 per bag that was lost by the airline. And the travel agent, in her very buzzed, because they've been drinking all day, says, no, the airline will only pay a couple $100. I said, I didn't say anything about the airline paying. I said your credit card. And she's like, wait a minute, tell me that again. I said, if you pay with a credit card, Signature for Visa, Platinums for American Express, there's extra insurance built into the credit card. Nothing to do with the airlines. Also, if you buy a phone with one of those cards and you lose the phone, you break the phone, it gets stolen, it stops working, you can get a new phone at no cost. This watch. The other one I bought stopped working right after the warranty expired, the 1-year warranty. I simply went to American Express, filed a claim. They gave me a new watch, no deposit. So I don't recommend that you use debit cards or cash or checks. Always use credit cards because there's a lot of benefits built into the credit card that, quite frankly, a lot of people don't know about. So use your credit card and then pay it off in full at the end of the month. If we still owe credit card debt on closed credit card accounts, is debt settlement usually a part of credit repair? Debt settlement can be a part of it if you owe money on a closed credit card and you've missed payments, and so you've already been reported 90 days late, I would highly recommend doing debt restructuring because the damage is already done. Now, if you owe money on credit cards and you've never missed any payments, and the reason you're in credit repair is because of an old collection or something, then I don't know that it's worth making your credit worse, because the only way you can do debt settlement or debt restructuring is you generally have to get at least 90 days past due, potentially 6 months past due. And when you hit that 90-day mark, that's going to impact your credit score for 4 years if left alone. The other thing is, if you do debt restructuring with us and you're on a payment plan I cannot do anything about the late payments on that account until that account's been paid off. So if you do debt settlement and then you go on a 12-month payment plan, I can't dispute that account for 12 months. I mean, I can. It's just not going to do anything. It's just a waste of time. So that's why I say if you're going to go into debt restructuring, plan on having bad credit for at least 12 to 24 months, unless you have a bunch of cash that you can then do lump sum payment settlements on. And if you do, that's awesome because you're going to pay a lot less as well. So thanks for the question. If I switch my debt to 0% interest, will it help my score or will it hurt my score or help it? If you switch all of your credit card, if you pay off all of your credit cards, you will see a dramatic increase to your credit score. Whether you paid it off with a 0% loan or whether you did a balance transfer. When you pay off credit cards, you will see up to 168-point boost from just paying off the credit cards. 168 points minimum by paying off the credit cards. So paying off credit cards will never hurt your credit score. Will only help your credit score. And it's the most impactful thing on your credit is how much money you owe to credit cards. Tina was amazing. Tina is amazing. Yes, she is. She is absolutely incredible. And I'm glad to have her in my life. All right. I will see you guys next Thursday. If you need any help with your credit, if you're watching this, go to fortresscreditpro.com. You can enroll there directly. You can schedule a consultation. Again, it is pay per delete. There is a small setup fee to get started. After that, it's $150 per account that we get removed. If we don't get anything removed after 6 months, we refund the full setup fee if you paid that when you got started. If you need help with debt reduction, you know where to find me. Or if you need help, if you make over $100,000 a year as a self-employed individual and you want to learn how to pay little to no income taxes, I can show you how to do that. Anyway, see you next Thursday.